It's time now for a check on the stock market action. I have Mr. Daniel Yu at Yuanta Securities live on the line. Mr. Yu, it's a pleasure.
Good afternoon.
Right, so let's begin then over on Wall Street, where U.S. stocks lost significant ground amid concerns that the Federal Reserve's tightening policy will ultimately push the economy into a recession. Mr. Yu, what are your thoughts?
Yes, if you look at the Dow Jones, they slumped more than 500 points on Monday, while the S&P 500 and NASDAQ composite declined by 1.8 and 1.9% respectively because of the better-than-expected service sector activity data. If that continues, then people are worried that U.S. Fed will continue to raise interest rate much longer, and higher interest rate environment would cause quite a negative implication for overall liquidity condition as well as economic conditions. People are worried that the economy might be going into the recession next year. The probability has been increased quite significantly because of the long-term and short-term interest rate differential has changed to inverse relationship. And also, some of the news coming through is that Tesla is having a difficulty in terms of the electric vehicle sales in Shanghai, and the production might be cut by more than 20%. That is a worry, but the company denied on that issues. In any case, for the time being, because the market has increased quite significantly since the mid-October, market seems to be taking some breather, and people are worried that the economy might be not as strong as hopefully next year. So we'll have to watch and see how the Fed will change their stance. We are hoping that interest rate will not go up as much as 5% as most people are expecting. And sometime second half of next year, hopefully interest rate might be cut.
Right, and against that backdrop, and perhaps taking cue that is from the action in the U.S. market, the local bourse, Mr. Yu, also surrendered with the KOSPI falling below the 2,400 level. How do you respond?
Yes, if you look at the KOSPI, also it has risen more than 10% from the below 2,200 to 2,400. Now has corrected quite a bit. But nevertheless, we think that the trend should be in positive direction because Korean won is in appreciating trend. It did go up to as high as 1440. Now it's at around 1,300. And we are expecting that to go down to as low as 1,200 over the next 6 months or so. And if that's the case, then overall trade surplus level seems to stabilize. If you look at the overall deficit, has increased significantly because of the high energy prices, but oil prices come down quite significantly since the second half of this year. Due to that, we think that Korea might be turning into a net surplus in terms of trade numbers going into next year. But for the time being, because of economic slowdown, we are continue to see quite significant export decline. But in a longer-term basis, we think that that should be reasonably okay. And if you look at the overall flows, foreign investors are not doing much, and institutional investors selling because of the options and futures maturity tomorrow. And the market has declined by about 1% for KOSPI, and KOSDAQ is down by about 1.9%.
Right. Mr. Yu, back on Monday, crude futures recorded their biggest daily drop in 2 weeks, shedding over 3%, I believe. Now, they've since rebounded on this Tuesday, of course. What are your prospects?
Yes, if you look at the overall oil prices, it is in a declining trend because of the economic recession worries. If you look at WTI, it is at below $77 per barrel. And also, if the natural gas has been declining by more than 10% in the last 2 days, it's all depending on the demand side. Some positive aspect of that is if you look at the China, people are expecting the Chinese economic growth might recover from 3% this year to next year, 5.5%. If that's the case, then maybe the economy might be showing a stronger demand for the oil. But overall, Chinese government is focusing on more of a specific sector. So therefore, we think that oil demand is not going to be that significant. So therefore, range bound is expected somewhere between $75 per barrel to $85 per barrel over the next 6 to 12 months.
I see. All right, Mr. Yu, as always, thank you very much for your time and your thoughts.
Thank you very much.